Joining me now is Kerner, social media analyst with LiquidNet and expert in the secondary markets. Lou, welcome back to Bloomberg West. Always great to have you here. I guess first question, how far out is Twitter from being ready to go public?
Well, Emily, that's a great question. And I think every company has really its own time frame. I think Dick Costolo, when he was talking about that, he doesn't want to be growing the company in the glare of being public. Well, hopefully, Twitter's going to be in a high growth phase for years to come. And we've seen companies like Facebook, that could have gone public years ago, decide to stay private so that they could grow outside of the glare of being public and have their management focus on the business. So, Twitter could be public today if it wanted to. But, I believe that it's in the long-term interest of the shareholders to remain private for actually quite a lot longer.
You think Twitter has the financials to attract enough investment on the public markets to go public today?
Undoubtedly. Look, it's trading at about $8 billion. In the private market. And what we've seen consistently is that companies trade above their private market value when they go public because investors pay for liquidity, investors pay for transparency. And so they could definitely be public today if they wanted to. But being public, what problems does being public solve for Twitter today? As you said, the employees can get all of the liquidity they want to in the private markets today. The VCs, if they want to, the angels, if they want to, can get all the liquidity. So I think the right thing for Twitter to do is focus on the long-term value of the business and stay private.
So if you could put a time frame on this, is this something that you think might happen in a year, 3 years, 5 years, or is there really just no way to tell?
I think there's no way to tell because there's not a point at which you can and can't be public. I mean, it's my view that it's to the detriment of Groupon's shareholder value long term to be public today. But they had shareholders who wanted to cash out, and they believe that and cash out as soon as possible, and they believe that the way to do that at the highest value was to be public. But Groupon's having to deal with a lot of issues now being public, and it's a significant amount of management time, employee time. They're now going to have to manage to quarterly numbers. That doesn't always maximize the long-term value of the shareholders. So it's really a question that has to be answered by each company's management and shareholders.
Do you think Twitter should look into looking into more star board members?
Well, look, that's certainly something that institutional investors like to see. They like to see familiar names on the board, and they like to see, familiar names in management. And so, if current management gets out there, starts developing the relationships with institutional investors today, that would help in an IPO. Twitter, I think has a lot of work to do in terms of their technology platform. They need to stabilize it and enhance it. I think they need to stabilize their management and enhance their management. And they're certainly early in the development of their business model. But I think most informed investors see the size of Twitter's audience today and the growth of that audience and believe that Twitter's going to have enormous value down the road and that they'll figure these things out.
And, I know you do a lot of research on Twitter, but as far as you know, how much money is Twitter making?
I think they'll do over $200 million next year. The promoted trends is sold out most days, and you can't even get it on a local or even national basis. It's global today, but they'll make that more local over time. Promoted tweets are going well, promoted followers are going well, and these are all really early in their development. And I'm sure that there are going to be more great products to come.
So if Twitter did go public today, what would its risk factors be? Because there certainly are things that are keeping it from going out of the gate.
I think what's keeping it from going out of the gate is management's view that they want to focus on the long-term value of the business. The risks of being public today, again, is that it's a massive amount of time that's got to be spent by management on being public. And if you're spending time on being public, you're not spending time on maximizing the value of your company. And so, I really think that Twitter, just like Facebook has stayed private, years after they could have gone out and been public, I believe that that's likely what Twitter's going to do as well.
What about the risk that Twitter is a fad or doesn't have sort of long-term longevity? We saw it happen to MySpace, Dig, for example, even Yahoo.
Look, you never know. There's nothing constant, Emily, but change. But what we've seen is, really up and to the right from Twitter, really since its earliest days, we see that they continue to grow at a very rapid pace. If you saw the statistics the other day, we got another record in terms of tweets per second from Tim Tebow. And they've built that mass audience, and there's a massive network effect to what Twitter has developed. So I don't think it's a fad. I think that the bigger risk than it's a fad is that there will be another technology that'll come out. If you take a look in China, they have a microblogging service called Weibo that has effectively copied Twitter a couple years ago, but because they have a more stable platform, they've been able to iterate that, and it's quite honestly a much more compelling product for its users in China than Twitter is for its users today. But I'm confident that Twitter is going to be able to solve these technology problems, iterate the product, and I think it's going to be an extraordinarily valuable company in the long run.
We will be continuing to follow Twitter's story throughout the year. Lou Kerner, social media analyst with LiquidNet, thanks for joining us there from LA.
Thanks, Emily.